We've been seeing is Sarat Sethi. He is managing partner at Douglas C. Lane. Also, Elizabeth Vermillion of CFRA. Good to see both of you. Sarat, why don't we just start talking about Caterpillar and Honeywell? It seemed to me that the guidance that Caterpillar issued was quite a bit weaker than what Honeywell's seeing. What do you think is really affecting that?
I think it's the uncertainty. Any company this last couple of weeks that has called out either China in terms of the virus or just trade uncertainty has been penalized. And it's actually the companies that have shown secular growth that the stocks have really reflected really nice pops. So Honeywell, I think, is one of the best managed companies out there. I think of Honeywell as the old GE. They've really managed their businesses well, even through the uncertainty over the last couple of years. CAT has always had these up and down quarters, and I think on the news release, it'll be interesting to see what they say on the call. They really kind of brought down the guidance to the lower end to say, well, we'll hit the higher end.
It's being conservative. We'll see. The stock has kind of fluctuated up and down.
Fluctuated up and down.
Since they put these numbers
and I think at this point, at least through this earnings season, a lot of investors are not giving the benefit of the doubt or might not be aggressively buying them because there are other stories. There are other companies that are doing well through this, and those are the growth companies. And really, when you look at kind of that's the quarter that people are expecting.
Elizabeth, we're in an awkward time right now. You're getting a lot of numbers and a lot of earnings that are here that plenty of them are better than expected. But then you do have this uncertainty created by the coronavirus in China and the potential for what the shutdown there is going to mean for the economy, not only in China, but around the globe. How do you play this?
Well, I think our outlook on Caterpillar is definitely cautious, and it's definitely driven by sales outside of the U.S. It'll be interesting to see how the next few weeks play out and how it affects China's manufacturing or CAT's manufacturing in China. They have a decent amount of factories, none of them specifically in Wuhan. It'll be interesting to see if any of that has an impact.
You have a buy rating on the stock. Is that at risk based on what they've said today in this earnings report?
So we have a hold. We're very cautious on CAT for a number of reasons, including a lot of pricing pressure in China.
Okay, and what about a price target? Where are you focused on that for the next 12 months?
So our 12-month price target is about 156. We're going to evaluate where they go on the call and go from there.
Sarat, how do you kind of read on what's happening in China right now?
I think if you go back to history, the way to play this is if we get a little more of a pullback, a 5 to 10% pullback, especially with manufacturing companies and those associated with China and transports, that's kind of when I would get aggressive. You've seen about maybe a 5% pullback in, a Delta, United, and then some of the key manufacturing companies. I think that gives you that opportunity because a year from now, this will just be kind of a one-off at that point, and investors will not really take it as long-term earnings growth. But in the short term, as some of this news comes front and center, and you get, unfortunately, some more bad news, that as an investor is the opportunity that kind of you would look for high-quality companies. CAT's a really high-quality company. That's, if it gets sold off, if Honeywell gets sold off, or you look at some of the other blue-chip companies, those are the opportunities, I think, that you can actually put money to work. And really, where the market is, it's still pretty close to its all-time high.
Sure. Elizabeth, with that sort of viewpoint on things, if you're trying to look through what's immediately happening with the coronavirus, how can you measure what's happened in China for Caterpillar, just even from the trade uncertainties that we've had to this point?
Yeah, so I think the biggest story for Caterpillar in China is right now actually competitive pricing pressure. Their product sales are facing a lot of pressure from other competitors in China who can sell at a lower price. And the China-U.S. tariff situation definitely has not helped them improve their pricing in that area. So we look for them to gain some traction, whether it's repricing products or changing some of their manufacturing in China right now.
Construction for Caterpillar, I noticed in North America, was maybe not as strong as had been anticipated, or am I reading that wrong?
Yes, that's definitely where we see the big bright spot right now with Caterpillar is U.S. Non-residential construction and infrastructure spending for their products. That's where we see the strength going through 2020.
Okay. Elizabeth, want to thank you for being here. Sarat,
thank you so much.
One other thing that we'd be looking for, what would you tell people to be on the lookout today?
I think the key is going to be guidance from a lot of these blue chip companies. They see a lot more in the world than we do. And in fact, if China, which we know is kind of discounted, it's really the rest of the world. How is Europe doing? How is South America doing? And I think even India. So that's going to give us some guidance because what's happened right now in the U.S. is our 10 years now gone to 1.6. So you've got this whole issue of Is that because the world is slowing down, or is that because people are getting defensive because of the virus, and immediately what you do, the first thing you do is buy the most liquid bond in the world? And I think that's where kind of investors are trying to figure out which of those, or is it a combination of the two? If it's a combination of the two, I think the buying opportunity is going to be much better in the next couple of quarters.
So you think the 10-year falls below 1.5, or is more likely to hit 2% first?
I do think in the short term it goes down a little bit lower because we are still not over kind of what this virus is all about. So I think short term that could actually pull down a couple of the other sectors. You've seen the financials get hurt. You've seen the energy get hurt, which is kind of ironic because all the value sectors are getting really badly hurt, but the growth sectors are doing fine. That's because you've got the secular growth stories of the Amazons, the Teslas, the momentum stocks that are really acting well, and it's kind of more, I think, trading at that point.